I'm Gene Gard, Chief Investment Officer at Tellurray. When you get a big inheritance or windfall or tax return or bonus or insurance settlement, your first instinct is probably going to be to pay down any debts you have outstanding, especially things like high interest credit card debt. Financially, that's not a wrong choice. Obviously, I think we all aspire to be debt free, but it actually might be the wrong choice from a behavioral standpoint. Let me explain. There's been times in my life where I've incurred credit card debt and had it, and as soon as I had some sort of a big payment or windfall like that, I tend to use the money to pay it off immediately. And certainly you save interest that way. It's not really a wrong financial decision. But what I've found is that unless you actually change the underlying behavior that causes you to rack up credit card debt or other sorts of debt like that, then if you don't change the behavior, then it's just going to come back. And it's sort of squandering a big windfall to use it to pay off debt that's just going to sort of return. So, and what I'm really saying is that if you, let's say you had $50,000 of credit card debt and you got a $200,000 inheritance, well, obviously you'd probably pay off that debt right away. But what I'm suggesting is you might want to consider sequestering that money, putting it somewhere else, investing it in a prudent long-term investment portfolio, and completely forgetting about it. And from there, force yourself to actually deal with the debt through your normal income, everyday life type cash flows. Because what will probably happen is that whatever payments you're making towards the credit card, if you pay them off immediately, you're probably just going to spend that money on something else. It's unlikely if you were putting $2,000 a month toward a credit card and you suddenly paid it off. It's not like you would suddenly start saving that $2,000. I mean, you might, but we're all human, and that probably just doesn't happen in practice. So by sequestering the windfall money and then from there actively attacking your debt and feeling the pain of having to pay it off over a longer period of time via cash flow, it's a lesson. It might be an expensive lesson because obviously you're having that power of compound interest working against you, but hopefully the returns in your investment portfolio long term will at least mitigate that sort of. I mean, certainly if you're paying 25% on your credit card and you're earning 10% a year in the stock market, it's not going to quite cover it completely, but at least it'll help mitigate it. But by really having to force yourself to suffer through that pain of having to pay stuff off like that, or student loans or whatever it is, I think you'll come out of the other side a much stronger and more realistic and pragmatic financial person, if that makes sense. A really great example of this, which is less volatile than in credit card debt, is the idea of a mortgage. Most people, their goal is to pay off their mortgage as quickly as possible for peace of mind. And we understand here at Tellurray that life is not just financial. If it was all about the numbers and we were all like Mr. Spock from Star Trek, then you probably wouldn't even need advisors. But a huge amount of the value advisors like us at Tellurray provide is the behavioral stuff. So if you did get a windfall and you were tempted to pay off your mortgage, I mean, I've even seen online on message boards and things, people will say things like, I owe $150,000 on my house. I just got this $200,000 inheritance, so I can't wait to pay off my mortgage because then that will free up, $1,500 a month in cash flow that then I can use to apply other places. Well, just think about how long $1,500 a month in cash flow would take to build up a $150,000 nest egg. It takes a really long time. So the other issue is that, again, by paying off your mortgage, unless you're actually going to take those that freed up cash flow that you were paying on your mortgage and do something productive with it, it's really not necessarily all that useful to you. So the point I'm making is that and the other thing is, unlike credit card debt, with mortgages, you're almost, I should say historically, over reasonably long periods of time, you were very likely to have returns in the stock and bond market far in excess of what you would have paid on a mortgage. So over any historical periods of any reasonable length, it really doesn't make sense, wouldn't have made sense to pay off your mortgage. Another extreme example of it is, let's say you had $500,000 in cash for some reason and you wanted to buy a $500,000 house. well, on one hand, you could just pay for the house in cash and then own it free and clear, and that's very comforting. But on the other hand, you could invest that money, get a 30-year mortgage, and just pay off the mortgage from that same account where the $500,000 was invested. And again, historically, and probably, I feel like it's very optimistic this would work in the future. If you have a reasonably low enough mortgage rate, it's highly likely you could pay off the mortgage the full 30 years from that account with the $500,000 in it, and not only have money left over at the end, but probably have significant amounts of money left in that investment account. I mean, you might even have as much as you started with or more, depending on the return assumptions you use. So it's great to be debt-free, but on the other hand, there's reasons that you might want to consider not becoming debt-free as quickly as you'd like and taking the easy way out by using a windfall to pay things off, because there's important behavioral lessons that can serve you well throughout the rest of your life if you sort of pay off your debt the hard way. Just something to think about. Again, you can't really know for sure somebody's situation until you really do a full evaluation of all their circumstances. But the conventional wisdom that obviously you'd pay off your debt no matter what as quickly as possible by any means available, and windfalls may not be the thing that serves you best long term. Just something to consider. So I hope that was useful. If you have any other topics you'd like us to address, please let us know, and thank you for watching.